What is going on, family? Welcome back to DXB Crypto, your home of macro news for the small guy. And in this particular video, I'm going to focus on a particular area where everyone seems to be scared for the last 24 hours. But this could be the most amazing news that we've been waiting for, despite the markets reacting negatively to what's happened. So I'm going to take you through this. It's a really important video, guys. Smash the like, subscribe to the channel, and let's go. So team, the latest job report is out, and it's not just bad. It is absolutely a stinker. It is terrible. And of course, I want to break it down for you because this data changes everything for this market and the Fed's next move, guys. Very important. So before we jump into the rest of the video, I want you to hear this out, right? Listen to this.
For where the economy is going has come down to a little better than 1%, 1.2%, I think, in the case of GDP for the first half, whereas it was 2.5% last year. So that has certainly come down. But if you look at the labor market, what you see is, by many statistics, the labor market is kind of still in balance. It's things like quits, job openings, and let alone the unemployment rate. They're all by many measures, very similar to where they were a year ago. So you do not see weakening in the labor market. You do see a slowing in job creation, but also a slowing in the supply of workers. So you've got a labor market that's in balance, albeit partially because both demand and supply for workers is coming down at the same pace, and that's why the unemployment rate has remained roughly stable. Which is why I said we do see downside risk in the labor market. I mean,
Jerome, absolutely not. The labor market is terrible, and the first revisions, the U.S. government massively overcalculated job creation in May and June by a whopping 258,000 jobs. May was originally reported at 144,000 jobs, but the real number was just 19,000. Holy crap. That's a massive discrepancy right there. Of course, borderline criminal. June was reported at 147,000, but the number was only just 14,000. Okay. And now for July, the market added a net 73,000, way below the expected range of 110,000 to 114,000. I want to show you something because it does absolutely become even more clear when you look at this graph. Now consider this number here, right? That is going to be revised. And if that number gets revised, God knows what the total will be at the end of that revision. It seems to me that something is highly broken in the American system. And it's not just the labor market. I mean, majority of these jobs came from industries or sectors like health, right? So the economy from a manufacturing perspective is really sluggish. Now let's continue with this. Okay, I fully expect this figure. Okay. So what you're seeing here is, I mean, could they absolutely, look at these two. This is insane, right? But I fully expect this number to be revised. And again, I'm absolutely buzzing because most people, the average man, does not understand what this data entails. And in return, they just panic about crypto or will react to the short term. For the first time in the 4-year macro cycle, we're starting to see things really break. Now, let's continue to listen to JP for a minute because a lot of his arguments now are falling apart. Hence why the CME Fed tool went from 37% into a whopping 80%. And I have obviously, again, I have already posted this, well over 24 hours ago. Pivot incoming. September rate cuts have skyrocketed from 37 to 80%. Hold on, this is going to be wild. I was doing this yesterday, by the way. All right. So if you want to get these real-time macro impact reports and understand how to manage your life and emotion, because that's all it comes down to, understanding where we're going from here, right? So this number here, that is so poor, And this new addition of jobs that came from the health, education, and manufacturing jobs were down 11,000 jobs. This huge difference. This is the tariffs now. This is Donald Trump's tariffs coming home to roost. And if he ever wanted to make America great again, well, US manufacturing extends its slump, factory unemployment, the lowest, or employment rather, the lowest in 5 years. So you can't make America great again through tariffs. Now, what's happening, some of this data is going to start showing in Poland. And we're not talking about Epstein. We're not talking about Iran. We're not talking about what's going on in Palestine. We're not talking about any of the global geopolitical tensions out there. We're talking purely about the US economy and the ability to bring these manufacturing jobs home. Do you think the Germans will give up their Benzes and Beamers and whatever to produce them solely? They do produce them in America, but there are other components. There's Canada, there's the friction, there's Mexico, there's Japan, who came out and said whatever Trump said is not true. We haven't agreed to anything. And I have actually talked about that previously because, of course, they own over $1 trillion of US debt. Okay. Now, the layoffs are going to be surging, guys. The layoffs are going to be surging. The ramifications of this report is just beginning. Okay. So how do we approach this? Now, if you look at the markets, of course, stocks were down, crypto was down. But the first thing was Trump fired. Trump came out and did this.
Some breaking news today. The jobs numbers came out this morning. I guess they were lower than expected. But you've announced that you're firing your a Biden appointee, the head of the Bureau of Labor and Statistics. Her name, Dr. Erica McIntarfer. Tell us about what was going on here.
Well, it's a Biden appointee, and we've had
Biden appointee. You're the president right now, but I love it. I love it, and I'll tell you why I love it. News like this, they're going to panic, and the money printer is going to go absolutely insane. I don't think you understand, as a retail investor right now, where you find yourself in this August. The opportunity of a lifetime is coming our way, guys, regardless of the situation that we're seeing right now. They're going to have to print their way out of this. There's no two ways about it. The US is absolutely cooked in every direction. Now, once the markets start tanking, which they have, okay, so let's bring you some of the, this is, of course, top US stocks, top global stocks, Apple there, Nvidia, Tesla, you just name it, Microsoft, Meta, across the board. Look, Amazon is absolutely cooked. Of course, unemployment, and we're not even seeing the impact of the doge situation here, because the US, what I probably consider, Trump administration paid federal employees billions not to work, says the report. Well, government, so the American government employs about 3 million people and is the largest employer of the nation. Now, what's going to happen here is the Doge's cutting of these jobs significantly adds to the labor market predicaments that we're seeing right now. More money printing. The labor market is the standard which they have set, especially the Fed. Right now, Jerome Powell has no other options but to hugely pivot. But he himself is not safe. Check this.
Our two mandate variables, right, are inflation and maximum employment, stable prices and maximum employment, not so much growth. So the labor market looks solid. Inflation is above target, and even if you look through the tariff effects, we think it's still a bit above target, and that's why our stance is where it is. But as I mentioned, downside risks to the labor market are certainly apparent.
So on labor, given the fluid labor supply situation, is there a number for this jobs report we get on Friday that would look to you like equilibrium job growth?
The main number you have to look at now is the unemployment rate, because it's true that the demand for workers in the form of, let's call it, just say payroll jobs, that number has come down, but so has the break-even number, kind of in tandem. So, as long as that puts the labor market in balance, the fact that it's getting into balance due to declines in both supply and demand, though, I think it is suggestive of downside risk. So,
well, Mr. Chairman, the downside risk is a massive revision of July's numbers. Of course, June is absolutely ridiculous. This is what we needed. This is what we waited. And this is what we are hoping to see, because these numbers are COVID numbers. And once you get COVID numbers, we all know what happened during COVID. Now, how does that translate to our bags? Of course, as a result, Bitcoin dominance kind of 62%. We were hoping that at some point it will come down, but it doesn't matter. It's quite academic right now, because what's happening is far greater than most people anticipate. Of course, like everyone else, you have to be concerned. In the long run, of course, the markets don't last forever, but you saw Bitcoin's reaction here since that news, and it does not give a damn. It's holding nicely. I still expect a little bit of a blip. Of course, we are seeing that across mostly altcoins, but hey, at the end of the day, ETH dominance is only at 11.58%. So guys, this is a super important video. Please share it with everyone. Can't get information like this to be this bullish. Again, short-term pain for an explosive game is what I would say. But the Fed have really dug themselves a massive hole. And here we go. So 82%, 80%, the pivot, that's incoming for us, guys. All right. So this is where the real money is made. 80% of gains are made in the 20% of the market. So, yeah, do whatever you want with this information. Again, I said yesterday, press the trigger. I'm buying altcoins. I don't care about the dips. I'm absorbing these dips. And definitely in the next kind of 6 months, we will see how things turn out, guys. All right? Take care.